Eric Muade for the weekend of October 4th and October 5th, 2014. Let's take a look at Friday's action with the US markets up about 1% on average. As far as the Dow, S&P 500 and the Nasdaq are concerned, gold was down about 2%, so was crude oil, and we see that the VIX was down about 10%. Now for the week, we see that the Nasdaq was down only 0.8%. We see that the S&P 500 was down 0.75% for the week, and we see that for the week the Dow was only down 0.6%, and that's how we settled out for the week. So let's take a look at how markets look in terms of the technical aspects. We see here at the close of the week the Nasdaq coming very close to taking back the level above 44.85, which was the previous weekly closing high. So very close to that level. It's a nice test of the previous breakout level there. Now this breakout has held before successfully. We seem to have come there and touched that level, and the market coming back at least off those highs. That level also happens to be around the 33-week moving average, which seems to be support and was support previously in the year around the April timeframe when the market had a slight pullback. So it seems like that's where the market found support at some point during the week, but the close was very strong. You can see that on a weekly time frame, the pullback started when we had this negative divergence on the Nasdaq. And is the market out of the woods in terms of a pullback? I'm not sure. I guess we'll see how the charts do look like by the end of this analysis to make a conclusion as to where the market is more than likely looking to go. If you take a look at the Nasdaq daily, you start seeing signs of why the market should be going higher. Straight line connecting the lows, and you can see a well-established channel here. Ever since these 3 points were established, the market's been bouncing off this line, and you can see recently came back to that line over the last 3 days and held. It's also an area above the 200-day moving average, which is bullish, and also the breakout from the previous support line. So it has held before here, and also this held, and now we came and touched that low, and the market seems to be moving higher. So that's the price view. Now for the market to continue looking good and trading well, it does need to be trading back above the 50-day moving average. So we are still trading below the 50-day moving average, so we can never be sure whether this is now going to become a trap. So for the market to do well, it does need to be back above that 50-day moving average. What's really good for the market is this line has held. This line has been very instrumental in holding the market together, and it's held. As of right now, we have to conclude that unless it moves back below that line, this market wants to move higher. Also, you can see that the line connecting the recent RSI lows held, with uniform activity below the line, back above the line, which makes this a trap for anybody who is shorting the market. So the market on a daily chart does look like it wants to move higher. What's really confusing here is if you take a look at the 30-minute chart for the Nasdaq, you'll see that there's a channel here that seems to be resistance, and the market needs to be trading above that channel if it's going to continue doing well. Also, you see that the previous high, which is the intraday high for the Nasdaq, came here just above 4600, and you can see that was a break point there. So you draw a straight line, and we've previously stalled in this area, which was this high. Time to go short term, and over the last couple of trading hours we've come here, made a triple top, which would suggest that we might start the week with the market moving lower on a short-term basis. Now you go to the Dow, you see that it also held at the 33-week moving average. Now the 33-week moving average has been holding the market and stabilizing the market over the last couple of months going into last year, and you can see every time the market would come back to this 33-week moving average, the market would bounce higher. So we touched that level intra-week and the market came back. Now the one thing we haven't been able to do is go back above 17,100, which was a previous breakout level. So far it's okay. It's not broken. The market did bend, but it did not break. We still continue looking at the market here, showing resistance on the weekly time frame because the market has been unable to move above that line. For this market truly to be on fire, it does need to be above that line for a fresh move, fresh breakout into brand new highs and the beginning of fresh momentum. Right now we haven't seen that, so we have to conclude that the market here is trying to actually stabilize or at least trade sideways. Now there's a line here connecting the previous lows. As you can see that the lows recently have been coming at this line on the RSI for the entire 2014 period, and if the market can bounce off that line and move higher, then it could also be healthy for the market, suggesting that the market could move higher. So that line needs to be showing support as we begin the next trading week. Now if you go to the short-term period for the Dow and take a look again at the Dow 30 minutes, because the 30-minute chart seems to be having a very good view of what's going on internally. You can see for the Dow, we are now trading in this downward channel here, and we closed right at that top side of that channel. For the market to do well, it does need to be above that, otherwise it might turn into an area where you'd expect a pullback as far as the market is concerned. Now there's another way you can take a look at this from a back test point of view. If you draw the line like that, you can see that we had uniform activity above that green line and back below it, which was a trap, which happens to be that high. And also we bounced and hit that level a couple times, and every time that was a short-term high. And as you can see, the market did settle out trading at the backtest line. Again, that could turn out to be short-term resistance as we begin the new week. Otherwise, the best way to take a look at this is the market does need to be above that line if it's going to continue moving higher. Let's take a look at the transports daily. And here we see a well-defined line showing support. So the market has been bouncing off this line last couple of months. It's going back to the beginning of 2014. This has been support territory, and so the market is back above that 50-day moving average, which is good. And also we see that support came where support has been coming in the market as far as the transports are concerned, right there. You can see every time the market has bounced off that RSI level, the market has gone on to trade higher every single time. And so we hit that level with uniform activity and bounced. So we have to conclude, without any further information, which we don't have of course, is the market wants to move higher. Go to the S&P 500 weekly, and you can see it also touched the 33-week moving average and held. Now we haven't come back and taken the space above 1985, so it needs to be above 1985, the previous weekly closing high, if the bulls are truly going to be in control. You can see from the RSI that it needs to hold this line, otherwise a break of this line is not going to be good. Of course, we saw midweek what happens when we were trading below this line here. The market had a big drop, but it did close very well, or at least with some constructive action, because it seems like it wants to hold that line. But sometimes markets are tricky. Maybe eventually it still breaks that line. So a bounce off that line will be good. The last time it bounced off the line was during this drop here, and the market went on to make new highs. If it bounces off that line, expect the market to continue doing well. You go to the S&P 500 daily, and just like the Dow Transports, a well-defined line is where it bounced after the selling off the last couple of 3 days. Also, we came to this last line of defense, and this last line of defense comes from the entry level here. If you draw it like that, so there's an entry level, and that entry level coincides with these lows of 2014. draw a straight line from that level is where the market has bounced for the entire trading year. Every time we bounce on the line, the market moves higher, and guess what? We touched it here, and you can see that the market had a nice Thursday Friday session combination there. So we have to conclude here that net the market looks okay. You go to the S&P 500 and take a look at S&P 500 again from, let's take a look at the hourly, which we haven't done. And the hourly shows that there is some type of resistance on the channel there on the hourly. Above that, the market should be constructive. If that turns into resistance again, expect a pullback at the beginning of the new week. The 30-minute chart for the S&P 500, you see that we are contending with this channel here, and the market does need to hold above that channel if it's going to do well. There's another way you can look at this as a previous break point. During the week, we broke below that level there and had a plunge. And so what the market has done is just come back to the break point. The break point was there. You can see that. And draw a straight line. You see that this could very easily become resistance. Why? Because it was previously break point, and the break point is now being tested again. Another view is if you take the top side of the 30-minute RSI and draw a straight line, you see that it gives you that high there, which is this high, and now we are finding resistance on the same line. That could be a problem, and you can see that once we hit this level here and pull back, which is this break point somewhere here, so we broke below here, which is this pullback. We draw a straight line from there. You can see that this has become resistance over the last couple of week or so. Every time we come here with the double top, that was a high, and so this is where it seems to have stalled into the last couple of hours of Friday's session. Now let's take a look at the Canadian market. You can see here it's been down the last 1, 2, 3, 4, 5 weeks, and ever since it broke below this trend line there, it's been down. Now it's trying to find support at the 33-week moving average, which is where it last touched, and so we'll see whether it's going to hold above that 33-week moving average. I do note also that it can defend that level on the RSI. So that level there comes from this ideal entry level, which is this entry level here, which actually began a nice move in the stock that took it to new highs. So if it can bounce something like that on that line and hold, it could do well. And we'll see what happens in the next couple of weeks as far as that weekly chart is concerned. On the daily, seems to have held the area around the 200-day moving average, which is okay, but I think there's some damage that has been done here because there was a trend line break here, so that market seems to be suspect, and also it had previously been holding support going back around this level. Now the fact that it's not bouncing off this line here is probably an indication that something has changed. Previously, this was the most recent support on the line, which was here. And just the fact that we slashed below the 50-day moving average is probably something telling us that this market has changed its makeup. Of course, we'll see as more data comes available. If you take a look at the hourly, you can see that there was a break of the trend line here. So there was a break there, and that break started this steep drop. Now we draw a line from the break, and you can see that that has now become resistance with a short-term high there. And also if it doesn't move above that line, then this is also going to be another reason to take the stock lower. And of course the market there can move higher if it can break above the highs on the hourly RSI and also above this line. It needs to be above that line if it's going to do well. Also needs to be above this channel. So there's a channel there. Let me see whether I can change color. So there's a channel here. It needs to be above that line. It needs to be above RSI tops and also the break of the recent RSI there. So far there's lots of resistance. That's why I say that market is suspect. Now if you take a look at Apple, which seems to be holding around the 50-day moving average, which is constructive, also seems to be holding this line here, which has been support on the daily, and also this back test of this level, which has been support ever since we moved above that line during this gap up here. It's been finding support at that line. So this line has become back test support zone for the market. Every time it touches that line, it moves higher. And recently you can see it held there, which is somewhere around $98. Now, of course, if you want to go along this name, personally, I would say a breakout above the recent weekly closing high would be the best way to go. So that would be at a price of 102.50. So if it can hold and break out above 102.50, that's going to be a fresh breakout trigger point. Otherwise, it's probably just trading sideways. Now, if you take a look at the markets on a monthly level, we see that the Nasdaq continues holding above. So the Nasdaq continues holding above 69.1, which is bullish. S&P 500 continues holding above 69.1, which is bullish. And the Dow is actually now down below 69.10. If it can recapture that 69.10 level, and all major markets are above 69.10, then that suggests a very strong market. But if all markets are trading below 69.10, then we are going to see a quickening of pace to the downside.